Just when you thought things were getting good, the world says, hold my beer. And that's exactly what happened this past weekend when we started, along with Israel, major combat operations against Iran, and where we had seen interest rates coming down to 3-year lows. Thankfully, we're not up so high that we can't recover, and there's always room for improvement, right? So we're going to get into this today. We're going to talk about where rates are at. We're going to talk about why rates went up. We're going to talk about jobs week. This is supposed to be a huge week for jobs. Not so much. Kind of taking a back seat to Earl. And then we got talking about the do's and don'ts of home buying. And then we'll do a FAQ Friday question for you. And then we're going to show you the rates and show you where we're at. So let's get in with this. Let's get in and break down this news. Interest rates have taken a sharp rise, and the question is, when will interest rates come down, and why did interest rates go up? Well, what you see here is the Strait of Hormuz. Now, when I was in the Navy, I was a navigator on one ship transiting in and out, and I was the XO on another ship transiting in and out. And let me tell you, the pucker factor on this transit is very high. Matter of fact, when Navy ships go through the strait, we typically go as fast as we can go safely, maximum firepower ready to defend our ship. We have helicopters up on front and back, and we get through as fast as we possibly can. Because to the north of the strait is, that's Iran. And they got silkworm missile sites, they got man pads, they got all sorts of things that they can use to basically hamper the shipping and stop the shipping, close the strait down altogether. And guess what Iran has done? They are closed down the strait. They're going to sink any ship that goes through. And President Trump on, was it Wednesday or Tuesday, said he was going to ensure safe passage for ships going through the Strait of Hormuz. And that actually helped rates go up. President's going to, somehow protect the shipping in the Gulf. Well, guess what? You can say it, but it's a lot harder to execute. And that's the problem that we're having. As a matter of fact, today, at least 3 cargo ships have been struck by unmanned craft from Iran in either import or underway. And not all those stories have been confirmed, but what that is doing, that is kind of putting a little bit of fear into the market. And what's the big deal about oil? Well, there are over 140 tankers on either side. No shipping's going in and out. What does that mean for the world? Well, 20% of the world's oil comes from the Persian Gulf. Ain't getting through right now. That's a big deal. And you know what? It's not just us that needs that oil. Actually, we don't need that oil. China needs that oil. 45% of their oil comes from Iran. So there's a big interest in this. And what drives prices? Energy. How do we pay for the energy? Oil. Well, guess what? Oil prices are going up. They haven't really super spiked, but if this is prolonged, expect inflation to go up, expect interest rates to continue to go up. What we need is an open Strait of Hormuz. Let me tell you what, transiting through there, you look at the picture. It is not a fun transit. Nobody looks forward to that transit. Nobody. Because again, you got Iran on one side and you got the United Arab Emirates and Oman on the other side. And none of them are really our friends, at least certainly at times, certainly when I've been transiting through. It's scary. And while you say, God, a ship can go through there, not all of that water is navigable. Pretty shallow. You can see a lot of shifting. It looks like there should be some shifting sands. We've had ships that have actually grounded, not necessarily Navy ships, but we have. And other ships have grounded because the navigation of that channel is not easy. So anyway, Strait of Hormuz, Iran, MCO, that is taking really center stage right now for our economy, for interest rates, really for world, and pray for a quick ending or abatement of the loss of shipping through that channel, and more so the loss of lives. Anyway, let's get on. This is jobs week. This is supposed to be a big week for jobs. Well, guess what? Not a lot of news. All right, and whatever news is coming out of jobs isn't really that important. We did get the ADP employment report. This is a private sector jobs report, and we had 63,000 new jobs in February. That is more than the 50,000 that was expected. So a better report, and really the good thing is You want jobs. You want people getting jobs, especially in the private sector, small businesses. Small businesses truly do run the economy. We don't need these large business people. Heck, they're the ones who are using AI, and they're the ones that got more people than they need anyway. Just think of the government. Hiring has picked up, and that just shows by the numbers. 63,000. Pay increases steady, 4.5% for job stayers, 6.3 down from 6.4% for people who are changing jobs. Initial claims were flat for unemployment. Continuing claims, I saw 46,000 jump in continuing claims up to 1.87 million. And what that shows is once you lose a job, it's hard to get a job, especially in the same sector where if you're in a sector that's actually kind of downsizing or hurting right now due to the economy. We also had a Charger jobs report that showed 50,000 cuts in February. That on top of the over 108,000 job cuts in January. Those 2 months together are the largest number of job cuts that we have seen from the Challenger job report since 2009. That's right, that's a long time ago. What was going on then? The Great Recession. I'm not prophesying that we're going to go into a Great Recession. Just know it's hard to get a job. There's a lot of reasons for it. That's about it on that. The big thing now tomorrow, the BLS, the Bureau of Labor Statistics jobs report. What will the unemployment rate be? Will it be at 4.3%? That's where we were at last month. Will it go up? If it goes up, that's good for interest rates. We might get some good news as we go into the weekend. Will that unemployment rate stay the same or go down? That will really give pause to the Fed in having them lower the Fed funds rate when they meet later this month. I'm at a point now where I have more leads coming in than I've had really in the last couple of years. Just off the hook. A lot of applications come in. A lot of people are interested in buying. Let's go over the do's and the don'ts of buying a home because I see these mistakes. I won't say I see them all the time, but I do see them sometimes in the worst timing too. So let's talk about the do's. 1, get pre-approved before you search. It helps to know what your budget is. You're not going to know your budget, especially if you're moving to Hawaii, because you always underestimate what your income is going to be. Even if you have your LAS, you're probably going to be off a little bit. So get pre-approved. Always hire an experienced agent. You know what? Your most experienced agents aren't going to be necessarily on Zillow. Man, there's a lot of people out there. There's a lot of realtors on island. But I would say less than 10% do 90% of the work or of the transactions on island. So really, you want to work with an experienced agent, not just an experienced, but an agent who understands what you're going through. If you're in the military, you want one who's a military relocation professional, all right? Not just a military, but who has a track record. How do you find out? Google, ChatGPT, all right? Search top realtors in Oahu with veterans. You'll probably find out, hey, I know that person. You can do the same. Who's the top VA lender in Hawaii? And you could do that, ChatGPT. I think I might know who's going to pop up. I didn't put myself there. You did, for trusting me, which I thank you for tremendously. All right, consider must-haves versus nice-haves. Hey, you're not going to get everything you want in Hawaii, but Hawaii is going to give you so much. You just got to give it the chance, but you got to have that conversation with your significant other. Those must-haves, maybe nice to have, but not necessary. Prepare for more than the down payment. Even if you're doing a 0 down payment VA loan, you got to have some money to pay your closing costs, to move into the home. I mean, hey, you know what? You might need some new furniture. You might need to replace an AC. I know I had to do that in one of my homes when I bought. So have the money set aside. You can't just go in with just enough to cover the closing costs to close the loan. You got to have more than what you need for your down payment. Keep your finances steady. Don't go buying a new car. Please don't do that. Don't open up new credit cards. Don't go to the military exchange and you get 25% off your first purchase if you open up a military star card. Woo woo! Have you ever done that? I hate pointing at myself, but I know I did it. Don't do that. Please don't do that because you might ruin your ability to buy. So let's go through the don'ts. The don'ts are really the opposite of the do's. Don't shop without knowing your budget. Not only are you wasting your time, but you're wasting your realtor's time because you might say, I want to look at $1 million home, but you might be qualified for $500,000. Or maybe you are qualified for $1 million, but then you realize, oh man, I can't afford that payment. Let's bring it back some. Don't shop without knowing your budget. Shop for homes alone. Don't shop for homes alone. don't go out by yourself. Go out with a realtor. Go out with somebody who's experienced. Again, that goes to hire an experienced agent. Don't wait for the perfect house. What is perfect? Perfect is the enemy of good enough. And let me tell you what. No house that I've ever bought has been perfect, but it's been good enough. And let me tell you, they've paid, all my homes have paid me on the backside with appreciation, especially in Hawaii. All right. Again, don't wait for the perfect house. Take the house. You can always make it better. And then don't forget the budget for closing costs. I already talked about it. Got to have some money, honey. No money, no honey. No money, no home. And then don't make big purchases. I already talked about that. Really, again, the don'ts are just the opposite of the do's. All right, that's all I got for you. The do's and don'ts of home buying. Here's what you need to do. You need to call me, boom, and I'll help you out. All right, it's that simple, guys. It's just that simple. FAQ Friday. This is a new one we're going to play around with. Why would I ever give up my low mortgage rate? I got a 2.25 mortgage rate. Why would I ever give that up? Well, you know what? I have clients who got great rates, but you know what? They're still kind of struggling. Why? Because they maxed out their credit cards. They maybe did not slow down their spending, or maybe they came upon hard times and now they got maxed out credit cards. They paid off their credit cards with an installment loan, then maxed out their credit cards again, or they have student loans. You know what? A 2.25 mortgage payment is awesome, but paying 29% on a maxed out credit card at $30,000, at some point, you're going to find yourself in a hurt locker, and maybe refinancing and taking all of that debt that you have at 15 to 30% and bringing it down to a blended rate of maybe 5.5% is better than that 2.25% alone. I've seen that. I've done that. If you're struggling and you have a low rate, with rates where we're at right now, you're going to get into the fives on a refinance. If you have enough equity, maybe even into the fours. So don't max out your credit cards. And if they are maxed out and you're struggling, don't give up. Now, that's one of the things I learned in my life. Don't ever give up. Talk to me and we can help you figure out if keeping that low rate is smart or if it's better off financially to refinance and take a bit of a higher rate. Finally, VA rates, where are we at? All right, VA rates, they are up. We ended the week right around 3-year lows, 5.64. We're now right around 5.74 so really up nearly, a tenth of a point, a quarter of a point. All things considering, we're at war right now. That's not too bad. If this war is prolonged, if Iran proves that they can keep the strait shut, that is going to cause rates to go up, oil prices go up, interest rates will go up, inflation will go up. So we really need we need it to be over with. We can't, and I'm not even talking boots on the ground. We cannot have this be a prolonged, and nobody wants that. Certainly, Iranians certainly don't want that. We don't want that. So we need to get this thing over with. The longer this lasts, the worse the impact is going to be on our economy, on interest rates, more importantly on our people. That's all I got for you this week. Next week we have inflation reports coming out. We'll see where we stand, and we'll see maybe the impact of the rise in oil prices in our inflation reports. You guys have a great week. Stay safe. Say some prayers for those. I actually worked with Admiral Cooper multiple times in my career. Not a better leader leading our service members. So Godspeed to you, sir, and I'm praying for you and everyone out there. You guys have a great weekend. We'll talk to you later. Aloha.